Single-family detached closings in December up 17% in Atlanta. 17. I said 17.
Wow.
Condos and townhomes, John, up 23% December 2019 over December 2018. That is a
that
big
sounds
thing.
like pretty good numbers.
Isn't that amazing? Isn't that amazing?
It really is.
Well, anyway, I know we wanted to start out talking a little bit about interest rates today versus interest rates this time last year. So let me just turn it over to you. What you got for us?
Well, I think that the big drop in interest rates is a big contributor to the statistics that you just said. That and builders are putting more inventory on the market, getting more sticks out of the ground, giving home buyers more choices. So that's helping just loosen the log jam of more buyers than houses. But back to interest rates and what they've done over the last year. I mean, this is the talk of our business.
Yep.
Interest rates have really bottomed out. I cannot remember them being any lower than what we saw really in the last since I've been in the business for, darn near close to 25 years. We're locking folks in, 3.3, 3.5 for 30-year fixed interest rate monies now. And that's just really kind of unheard of.
The rate this time last year was 4.8 on average. And the rate this year on average is about 3.8, but it's obviously dropped.
It's dropped. And just in the last couple of weeks, we've got the coronavirus scare going on. There's worries that might really create some slowing down of the global economy.
Anything that creates uncertainty throughout the world typically pushes mortgage rates down in the U.S. And it's because, right, John, people will put their money that they would have invested in China, they'll take it and they'll put it in 10-year Treasury bills.
Yeah.
And that pushes the
flight to
mortgage
quality.
Rate down. Yep.
Yeah, flight to quality. It's going to push the mortgage rates down, and we've seen that have about a 3/8 to 0.5% improvement to interest rates just within the last 2 to 3 weeks. And that's what's driving now, comparing year over year, we're now a full 1.5 lower than we were this time this year.
Which is amazing. They say home affordability today is better than any time from 1990 to 2008. 1990 to 2008, on average, the average American family, John, made about 10% more than they needed to purchase the average priced home. Today, the average American family makes 50% more than they need in order to qualify to purchase the average price home. Isn't that an amazing statistic? Talk to us about a pre-approval. What's the difference in a pre-approval and a pre-qualification, and why a buyer or a borrower needs to get invested and get a real strong pre-approval letter?
Yeah, man, you're great question. So a pre-qualification, generally that's something a borrower might get online with just the clicks of a few buttons, and it's really just going to be a credit pool. Is your credit within range? And they're basically trusting the information that you put into whatever system that is.
Right.
A pre-approval is going to go a step further, where we're not only going to look at not just the credit score, but the body of the credit. We're going to analyze a borrower's financial documents like pay stubs and W-2s, tax returns if needed, to really make sure that we're, one, finding out the right mortgage product for them. Okay?
Right.
Two,
which is important.
We're going to determine their total buying power, how much could they afford. And three, it allows us to give them in black and white, very, very reliable numbers that they can count on when they're out shopping for the home, that is going to represent the mortgage that they ultimately end up getting.